Ever since a few years ago in the euro crisis, companies have been very nervous about how to move currency around and how to get that explained properly to investors in their earnings. But in the past year, we've seen companies caught off guard. Brazil, Canada, Australia, Venezuela, India, in all of these places where currencies are moving. So we're going to talk a little bit about the multinational impact and ways to manage it and what's going on looking forward into 2014 as, China's on the horizon and Australia's moving in tandem with that and how companies can respond.
An increasing number of companies that are disclosing impacts to earnings and earnings per share over the last couple of years. You can see the graphic here of sort of a steady trend since, as Emily mentioned, about the time of the onset of the financial crisis. There's been a siege of volatility from a number of different sectors in the currency market. When we look at the aggregate impact, what we saw in the last quarter is roughly about a $6 billion impact, up about 40% from the prior quarter. Corporates really have a very complex set of currency challenges. It's not just one currency, as Emily mentioned. It's not just the yen. It's not just the euro. 1 cent on earnings per share basis. That's a benchmark.
I think we're at a critical turning point for markets right now. And in fact, I think 2013 marked that turning point. If China, I think, is obviously the big story because China, to some extent, is emerging market. The authorities in China widened the band in dollar China. So I think this is a very big story. EM currencies can weaken. And I think particularly at this stage of the dollar cycle, there's a high chance that they could. So I think it's very prudent to think about ways that one can hedge the currency. In EM, it's more complicated than in developed markets. Kind of needs to be a bit more diligent.
Quantifying exposures. And this is where tools like FiREapps can be very, very handy because for most of us large companies, your exposures are all across the world. Your supply chain is complex. And to know which currencies you're exposed to at any given point and what types of exposure are we talking about, transactional, cash flow type, earnings exposure, or are we talking about net equity exposure? Those are all important, and these you need to plan before you make up your mind as to which ones are a must hedge. Then if you look at setting the strategy, you want to know what your goals are. What are you trying to do? Are you trying to hedge earnings volatility? Some companies want to hedge the variance to their budget rate. And whatever your goals are, you have to make sure your strategy is aligned to that. And this would also entail thinking about which instruments, be it forwards, options, or combination that would matter. You should also be looking at hedging tenor. And by that, I mean, if you're looking at forecasted exposures that you are looking to hedge, then how far out should you be going out in order to do a cost-benefit analysis. And finally, for most of the firms that are not in the financial services or financial business, hedge accounting matters. It's clearly an important factor. We use FiREapps, of course, as a software that helps us identify, analyze, collate exposures, and keep track of them. And so FiREapps is fully integrated on one end with our treasury management system and on the other end with our trading platform.
We're seeing just an increased amount of people focusing on the entire portfolio of currencies and not just on their top 1, 2, 3, or 5 currency pairs. I think that the fundamental of financial risk management really comes down to making sure that nobody is surprised, clearly understanding what the exposures are, and then what risk mitigation one does or does not do, and what the resulting impact of that is really key here. We, FiREapps, have been in the business now since year 2000, came out with a technology in 2006 to support corporations and really understand their currency exposures wherever they are and whatever they are. We're seen as the data analytic for corporate foreign exchange, obviously web-based with customers all over the world. Thank you all, as well as your colleagues at Deutsche Bank, for a great partnership over the last few years, and looking forward to many more. And then, Amit, thank you so very much for being a great customer. Your insights today were really great. Thank you all very much. I really appreciate it.